the very first thing I would say to anyone is avoid at all costs the Instagram influencers. For some odd reason, they like to post from gyms flexing their biceps.
You're not an Instagram fan, Harris.
I'm not an Instagram. This is very odd to me, and they promise 10x returns, 10 times, 10 multiples of what you put in there.
Yeah.
Run a mile. This is nonsense.
Yeah.
You can't do that. If someone told you at the beginning of your life, I can manage your wealth and your finances and give you a surefire 10 to 12% per annum yield of income on your capital, I would say that would be an amazing result, a stupendously good result. If you're earning 10 to 12% per annum on your capital, that is excellent.
Right.
Obviously adjusting for inflation.
Yeah.
But instead, what we see, especially in the Muslim community, which I find very odd, is these influencers who are saying, I'm going to double, triple, 10x your money. And obviously, again, very dubious. So the first thing I say is deep dive on the people that you are investing with. I tend to prefer gray hairs and a bit of wisdom to balance the energy and dynamism of Gen Z, who also are valuable in this case because they are coming forward with the new ideas and developing the companies and are tech savvy. They know how to code, they know how to develop apps. But you do need those wise old heads, to develop the financial product itself and not fall into the pitfalls that we've had previously, like fractional reserve banking.
Yeah. I mean, what are the common pitfalls then that we should look out for when we think about investing ethically, apart from what you've mentioned about Gen Zs versus grey hairs?
I also look for leverage or debt that is disguised.
Right.
Last time we talked about this Sharia contract called the commodity murabaha or tawarruk.
Yeah.
And I did say it's not necessarily hugely important exactly what that contract is, but often when you see it in the small print, and everybody should read the small print, often it is a proxy for a loan financing. And it has become a default for people who aren't particularly concerned with doing things right. They say, oh, I specialize in Islamic finance, and we did a commodity murabaha financing of some business or some property.
Yeah.
Now, there are cases where it has to be used because there is no alternative, for example, due to tax legislation. There are some Islamic fintechs out there that I do support who have, for example, fractional ownership models of real estate. And they've had to use the commodity murabaha because there was no alternative available to them.
Yeah.
And they've been lobbying HMRC to change the legislation. That's something that I will champion because I feel that they have the right attitude. They intend to make progress. They intend to change the industry for the better.
Yeah.
But those lazy, individuals who pretend to know something about Islamic finance and say, I got some top city lawyers and they drafted me a commodity murabaha contract. And now I have an investment product that is halal and here you are, I've got a stamp on it. Avoid that. Look for leverage, look for debt-like instruments, look for participation, look for risk sharing, look for equity sharing, profit sharing. How do they share the profits? Do they align themselves with you, the investor? Do they have skin in the game? Or is this an asymmetric relationship? That's what the small print will tell you. And it's a process of education. I would recommend you get online to see Islamic Finance Guru. They have very good educational material on their website. It explains very well, how Islamic financial contracts work, how different instruments work. I don't necessarily agree with everything they say, but I think there's a huge amount of excellent advice on there.
Earlier on, you talked about how if a scheme suggests, an Islamic scheme suggests you get rich quick, it's probably going to be a dud scheme. It's a problematic scheme. Are you, in effect, implying that if one restricts oneself to an Islamic economic model, the level of maturity, the level of income is going to be far less than what one would typically get from the financialized economy?
Maybe in the current world, maybe there's some truth in that.
Yeah.
But why do we need growth? And I want us to think about this really carefully. What is growth for?
Yeah.
Much of growth is to service debt.
Right.
Debt exists because we have financialization of the economy. Financialization exists because we've made money cheap and plentiful. We made money cheap and plentiful by inflating the money supply because we can inflate the money supply. It's a powerful drug for governments to keep financing a perpetual state of infinite war and environmental pollution by simply printing more money. We're destroying ourselves and we're destroying the planet by continuing to insist on growth, growth, growth. We don't actually need to do it that way. And if we had a form of money that didn't devalue over time, that wasn't inflationary, that didn't cause this increase of money supply, then we would be in a position where we don't have to get rich quick.
Yeah.
We now have low time preference. We save and invest for the future. Again, we have sabr. We train ourselves in Ramadan. We discipline our nafs. We, as Muslims, are intrinsically, or should be intrinsically, low time preference people. We shouldn't be the kind of people who need to get rich quick and service our debt. We shouldn't have debt. It's inevitable. I mean, people will need to study at university. They take on student loans. It's a necessity, right? People want a roof over their heads. They want a car. People take on debt. I'm not saying, it's a sin just to take on debt. What I'm saying is that these are necessities, but we can service these necessities in a better way. And I sincerely believe that there is a better model out there, and we don't have to have infinite growth on a finite planet.
Yeah. What other ways are there available to us to save our money? If we want to avoid banks and the riba, and we're dubious about some of the Islamic banks, how else can we just save our money in a way in which we don't have to necessarily participate on a great deal, because most of us just don't have that time. And we're worried about, your investment models bring with it a level of risk. I'm sure risk is everywhere.
Yep.
But how does one just save money?
Yeah. So there's a process of education that has to take place here. And I recommend that people start out by reading what I say is general business books, general finance books, not complicated textbooks.
Yeah.
There are some good authors out there who write very easy to understand books. There is a Greek economist called Yanis Varoufakis who wrote a book called something like Teaching My Daughter About Economics, or How to Teach My Daughter Economics.
Yeah.
And it basically does what it says on the tin. And in fact, I used that book to teach my daughter economics. There is a famous anthropologist or economist called David Graeber, who passed away about 3 years ago, who wrote a book called Debt, the First 5,000 Years. Brilliant introduction to what is debt. I really recommend it. Michael Lewis is a very good general author on the subject of business and finance. He's written some excellent books. You'll be familiar, I'm sure, with The Big Short, which is about a group of people who predicted the global financial crisis before it happened.
Yes.
And how did they reach that conclusion? These are the sort of books I recommend to people to read before they start doing a deep dive into Islamic finance and Islamic economics.
Yeah.
And here I would recommend, as I said before, the website for Islamic Finance Guru. They also wrote a very good book about halal investing. I've written a few blog articles on this subject. Of course, there's a book that I've written on the subject as well, Heaven's Bankers. My blog article talks about investing in a halal way, investing and saving in a halal way.
Right.
So specifically, I get down into the detail of how do you construct a portfolio. Muslims really only have, I guess, 3 asset classes that they generally put their money into today.
Yeah.
The obvious one is real estate.
Yes.
And I think it's a very important asset class. You can see, touch, and feel it. It's even a store of value.
It is. Yeah.
It is cyclical. It does have downturns, but you can earn income from it. It's very flexible in that sense. So it's a good asset class to hold.
Yeah.
But I think as a community, we're oversaturated. We hold it too much.
Yeah.
I personally only allocate 15% of my personal wealth to it, right? What else do Muslims do? Well, some of them believe there's no alternative to conventional finance, so they use conventional products and they buy a conventional pension. Pensions are a very important area, and we don't have a Sharia-compliant pension.
Really?
So, there's this concept in the UK of a SIP, an SIPP. It's a self-invested personal pension, I think, if I've got the abbreviation correct.
Yeah.
I'm sure there's an equivalent in the US as well. I don't know whether you can do that under a 401k. But here in the UK, you can self-select your pension and select the products that you put into that pension. So, for example, at my stage in life, I'm into middle age. My kids are almost grown up now. 2 of them are. I don't want to be investing in risky venture capital schemes, early stage venture, and giving my money to some guy flexing his biceps on Instagram with a wad of cash in his hand saying 10x your money. That's not my guy.
Yeah.
My guy's got gray hairs, and I'm looking for long-term predictable income. I can't invest in bonds. Here's the problem with conventional pensions. Your conventional pension has a heavy investment in interest-bearing bonds,
Right.
because that's a way to get good predictable income stream, an annuity they call it.
Yes.
And of course that's haram. That's riba. That's interest. You can't go to Scottish Widows or Prudential and say, hey, can you give me the Islamic version of this? They won't know what you're talking about.
Yeah.
It's possible they may have a sukuk fund. Sukuk is a type of Islamic bond. But I think I mentioned this last time. I said sukuk could become distorted from what we originally intended when we set up that part of the industry 20 years ago. Yeah. And they now look and feel and walk and quack like a bond. So what is the alternative? Yeah. I mean, my PPNs are an alternative, but I'm a very small company, and it's a very big world out there, and I can't service retail investors, unfortunately. I'm only available to professional investors. I need to find a way of getting onto retail platforms and making it happen for retail Muslims who are not able to invest, $100,000 upwards.
Yes.
If you self-select your pension plan, there are long-term investments, equities, shares of companies that you can buy. The challenge is, you need to be an expert to know which are good companies and which are bad companies. And you would have to, my brother, for example, is a fund manager. He spends all of his days researching companies, traveling to meet companies, visiting their factories, talking to the staff, understanding how this business works, and then saying, I think this is a good or bad company. We should or shouldn't invest in it. We don't have time for that. The rest of us don't have time for that.
Yes.
How do you self-select a broad theme? What if you say to yourself, I think tech is an area with long-term growth prospects? I do. I think it does. Semiconductors, tech, and so on. You can buy a type of financial instrument called an ETF, an exchange-traded fund, which is basically a portfolio of stocks in one financial instrument. So you go to London Stock Exchange and you buy that particular ETF. It's like buying a share.
Right.
And now you have exposure to potentially, 20 or 30 different stocks. Let's say that ETF's theme is big tech. So now you've bought, Apple, Google, Microsoft, etc. Your theme could be renewable energy. So you've now bought renewable energy assets. So you choose a sector that you think has long-term prospects, and then you spread your risk across different industries, different sectors, and be defensive, right? What will perform in a downturn? People still need toothpaste in a downturn, right? So consumer goods, not a bad thing to have.
Right.
Financial sector, leaving aside the fact that it's, of course, most of it is haram.
Yes.
Financial sector is, of course, very cyclical and performs badly in a downturn. So this is not a particularly defensive stock. So those ETFs are something that you can invest in for the long term. If you have a 20-year time horizon, it's an excellent way to give yourself long-term appreciation. If you want income, as I say, real estate can give you income. You can invest directly. You can invest through an ETF or another type of instrument on a stock exchange like a REIT, R-E-I-T. Other types of asset classes, I tell most ordinary investors to stay away from derivatives.
Yes.
There's, again, I'm going back to these Instagram lifestylists. They talk about, at one time there was this fad for something called binary options. I don't even know what a binary option is. And I've worked in the industry for 30 years.
Yes.
And here you are selling retail investors this exotic, hybrid, fantastical financial instrument that can 10x your money. If you don't understand it, if I don't understand it, you shouldn't be investing in it. So I would generally recommend that retail investors stay away from anything that can leverage their returns, that can gear up their returns. That's what options does. That's what debt does. When you buy a buy-to-let property so that you can rent it out and earn income from that, if you use a loan to buy that property, on which you have to pay interest, you've geared up your investment. Now the 10% of the property value that you put in is giving you a proportionally much bigger return because you're not buying 100% of the property. It's the bank who gave you the money for 90% of it. Yeah. Of course, that means in a downturn, you lose your money. Sure. And even though we say safe as houses, it's not really safe as houses if you leverage. If you leverage, you're in trouble in a downturn because the bank will repossess your house. So I always warn investors of this.
Yeah.
So there are various instruments, and I would recommend people look at my blog article on LinkedIn. I've gone into a deep dive on some of the instruments,
Yeah.
Equities, bonds, sukuk, PPNs, real estate, gold and silver, by the way. I haven't mentioned Bitcoin deliberately because we've talked about it already. But I look for anti-inflation hedges. What if there is financial Armageddon? Should some of my money be invested in, for example, physical gold or physical gold-backed instruments?
Yes.
I think that's a good thing to do because it's a form of insurance against financial Armageddon. Of course, for me, the replacement for gold is Bitcoin. I believe that's its purpose right now.
Yeah.
It is insuring me against financial Armageddon. And I sincerely believe that.
Yeah.
So that, I think, is a summary of the types of instruments that people can put into their SIPP, SIPP, the self-invested pension plan.